All right, Sean Bogle, 27 July. Uh, in this video, I'm going to go over our tactical situation and look into some specific stocks that I'm been following, looking at. Go over some of the post-earnings situation, like Facebook and BIDU, Apple, Intel, Microsoft. Some of these stocks I'll go over in a little bit more detail. I'll go over 3D printing stocks, Triple D, SSYS, some of those names that I know people follow. So without further ado, let's go over the market real quick here. So the S&P 500 in this slow grind higher, kind of takes out a high, and then that's sort of the resistance comes in back into a range. So it's kind of been a frustrating tactical trade, to be honest. Not much volatility, not much follow through. It's tough to be buying new highs. There's really no momentum in this market, or very little momentum. I should say there's no momentum. There's always some momentum somewhere. It's just tougher to find in this type of environment. So you know, last week we kind of broke out the prior week's resistance, which looked good. The S&P actually made a new all-time high here, and it just couldn't get any follow through. You know, kind of stalled out Friday. We kind of got hit a bit. Sort of one of these low volume summertime moves. You know, not many people involved. A lot of people at the beach, I guess. So that being said, we're still in this uptrend, and we'll see where it catches some support. Obviously, these lows here of mid-July are going to be key support, you know, and we'll see what happens this upcoming week. That being said, this week it's going to be very busy. It's going to be a lot of earnings. There's going to be a lot of economic data. There's going to be the FOMC meeting. And it all ends up with the employment number on Friday. So it's going to be probably pretty active and not the more than likely the easiest market to trade, especially with the Federal Reserve in there. So just something to keep in mind. So anyway, you know, and there's a lot of potential for gaps in there. You know, especially in regards to the data that comes out and this, that, and the other. So S&P, again, just stuck in this range. We'll see if it can, you know, obviously the overhead resistance is Thursday's high. The support is really down in here around 1950, 1960. It's sort of this 21-day moving average riding this trend line higher. So, and we'll see what happens. Nasdaq, same type of situation. Didn't really make that didn't really break the high. Kind of stalled out there. Like to see on the bullish side that Friday's low holds, and then maybe they try to make a move up higher in here. The ultimate support is these lows, July lows, around 43.50 on the Nasdaq Composite. We'll see what happens during the week, but you know, some of the things that I definitely want to keep an eye out for here is some of the earnings that happened last week. So we had some pretty good earnings for the most part, especially on some of these high beta names. Let's start off with stocks that had earnings per week prior. Look at Intel, pretty monster move here. All in all, extremely favorable earnings report, and that low of the earnings day is held. And again, for those of you who remember my my earnings strategy, especially when you have one of these breakout type situations, I like to see how the market reacts to that. Acted very strong, you know, but really the day or two after this big move, I want to see how the market reacts. And as you can tell, that low held up, very bullish. You know, we kind of broke to new highs, didn't get that momentum that you know you like to see, but right now made a little bit of a reversal Friday. We'll see if you can build some strength. I'd love to see some momentum come in some of these stocks now, especially stocks that are this strong. Definitely have a potential for some momentum if they can just get going. So we'll see how Fridays, if we could take out Friday's high and maybe try to punch through this 35 level in Intel. I know it's a very boring stock. Nobody likes to, it's one of those old tech stock, but look at this thing. The stock went from the low 20s now to the mid 30s. Pretty impressive. Definitely some changes. In the same vein, Microsoft, another one of those dead investments over the last 10 to 15 years since the internet bubble, but it's had a pretty impressive run so far this year, from the mid 30s to the mid 40s. Had some bullish developments. Look at that blowout. Unfortunately, I missed that, but again, now it's consolidating here. I'd like to see this 44 level hold as support, and the next resistance here is around 45.5. Want to see that come back and maybe continue this move higher here after this bit of consolidation. Another stock that reported earnings, was kind of mixed after the earnings was reported, was Apple, and it kind of is another bit of a strong run this year, especially since that first quarter report. Had an amazing run here. It looks like that 100 level is a magnet for it right now, potentially. Again, the day after the earnings was reported, had a pretty nice move here. Got involved with it right off the open, and but of course the market's a little wishy-washy, so it kind of made those new highs, and now it's just kind of been consolidating. Had a pretty strong Friday, and right now is the stock really this number one stock I'm looking for this upcoming week, just due to the fact that this 97 and high 97, 98 level, which it couldn't take out on Friday, but I'm really looking for it to punch up through there and see if there's any momentum to get that stock to 100. Again, very bullish, relatively strong, a go-to stock, I think, for this upcoming week. So again, something to keep an eye on. I'd like to see how it reacts, if it can punch above that 98 and make a run for that 100, and possibly higher. So something I'm going to keep an eye out for. Facebook, another one of those favorites, if you will. People either love it or hate it type of stock, and had blowout numbers. Again, as I've been talking to week in, week out, this has been the strongest social media stock out there, and it's proven again last week that has all been warranted in its incredible earnings report. So it gapped up pretty nicely here above all prior basically into all-time highs. So once I saw that, I mean, the ultimate support is going to be the $72 to $73 prior resistance, and so far it kind of made a short-term support there around 76 and change, and which again, now post earnings, it's kind of stabilized even on Friday. It has a little, closed a little bit down from the open, which is fine, but it's well above holding this gap. And what I really want to see now is this low on post earnings low to hold, which is again 74.5, which again corresponds to this high here. I want to see that hold, and then this now either go another day or two sideways, and then boom, try to take out these highs here of 76, 77. So it might be a good low risk, high reward to take a shot at this above Friday's high, which is 75 and say 3/4. Take a shot, put your stop in at 74, just below 74.5, and watch for it to try to continue this move to all-time highs. And I mean, long term, I mean, it's great right now. and just short term, as long as that low holds of 74.5, would be very impressive. One social media stock that finally woke up a little bit, who's been one of the weaker ones, is LinkedIn. Finally broke above its 200-day moving, 100-day moving average. Hasn't done that in quite some time. In fact, it's the first time all year that it's been able to do that. So, and it's been a big winner. Bought it above this level, and I actually sold it on whatever I had left on Friday, just for a tactical trade. I think it's due for maybe a little bit of a pull in and for a few days. Who knows what? I'm not exactly sure when they report. I have to imagine it's sometime this week. So again, that's going to be the big. The big, the 1,000-pound gorilla on for this stock. So how those earnings go, we'll see. Again, it could be potentially a big change, for this stock as well. Just like Facebook, maybe they get their act together a little bit like Facebook and has, and I mean, I guess Facebook definitely has the business model right now that all these other companies will be looking at to try to replicate. So we'll go over Twitter. Again, this has been the weak one in the sector, still stuck in this long-term type downtrend. Can't get above its 100-day moving average. In fact, its 100-day was that resistance there that it met in early July, end of June, and it's sort of been in this little downtrend ever since. Again, the key support here is the 35 level, which was this prior breakout. So we'd like to see that hold if you're long, and maybe finally break this downtrend, and maybe start a new leg higher. If just like the other. Just like Facebook has been able to do. So we'll see if that again had a great June, kind of a consolidating to lower July. Maybe August is the month that can break above. So something to keep an eye on. We'll watch it. We'll definitely want to see how that goes out. Let me go over 3D printers. I went over those a couple weeks ago. That's not it. Here we go. So TWTR is the one we all know. Had a great June and a pretty horrendous July. This blowout day was your blow off top, and then it's basically come right back into where it broke out from. Not a good sign. I would have loved to have seen at least this 100-day moving average hold up, and it just continues lower. But you never know with these. These stocks tend to, they march to the beat of their own drum. So, but right now it's stuck in that downtrend. I would want to see it pop above, get some relative strength. Right now you see it's just relatively weak compared to the market. And TWTR has been the weakest one out of the bunch. The stock that's actually been holding up, I guess, sort of the best is this SSYS. It at least is stabilized, is not broken a new low. It's above its 100-day. So this would be the stock, I think, a go-to stock potentially here. Kind of consolidating nicely. If you notice, it's kind of just been going sideways here. So if we can get above, I'm saying 106 to 107.5, I definitely would say it's worth a shot with a stop. Basically at this level here, the breakout level, and I would like to see it then get some momentum to at least challenge these 115s, 113 area here, and then try to get back into this blow off top area. So I think this would be the stock to really keep an eye on for that. This is the stronger one in the group. VJET, another lesser known 3D printer. Same deal. It's again stabilized here on this 18-ish level. I want to see it We got a level here at around 19.5. Again, above 19.5, 20. I guess that's the big figure. Might be worth a shot again here to try to get to these $25 to $27 area. So it might be worth a shot there. Again, I really want to see maybe some, you see the volume really spiked here and it's really petered out. I'd like to see maybe that breakout with some volume to come in and really across the whole sector. So even in SSYS, same thing. Volume's petered out. I want to see a breakout with some volume coming back, meaning, hey, these guys are going to try to push the stock back up into this upper range. We'll take a look at another one that's a lesser known 3D is this GTAT. This one I don't like as much, just to the fact that it had this big down gap here. It's really way below the index. Just not too fond of this type of pattern here. Especially it's right in the middle of this big range. But if those other stocks get a bid, it may be a level above this 15.25. If it can get above, at least then try to challenge this 100-day, which is roughly 16.5. So just another stock in the index to keep an eye at. That's all I have for 3D printers. Some other stocks. Getting back to SSYS though, I really don't like if this does finally break down, being it's the stronger one, it breaks below these levels. You know what? It just would negate this entire move as far as I'm concerned, especially if it pulls back in below 100. It kind of basically negate this entire move as far as I'm concerned. But again, time will tell. Something to keep on our watch list. So going into this week, it's going to be a very. I'll go over one more stock that had earnings. Amazon. Market didn't like it. Again, it's funny with Amazon. Every time the market doesn't like these and it gaps lower, if you find some sort of support, and it kind of did it on Friday. It opened lower and was people have stepped in here to buy it. At least that brought that down open. So again, we're going to see how this reacts. If you love Amazon fundamentally, a level now to maybe take a shot would be above Friday's high. Again, I don't really like that just for the fact that it's below these moving averages right now, and that's something that people tend to now look at and say, well, I'll buy it up to these moving averages and then I'm going to sell it. So not a really class A or B setup for that matter. But if it's one of those things, you got this fundamental thesis for it. You might want to buy above Friday's high, and your risk is the Friday's low, basically. And vice versa, if you're looking to short this thing, sort of the inverse to the gap up strategy, gap up earning strategy. You got the gap down earning strategy, and you're looking for a level to short. Short Friday's below Friday's low, because you'll have all you got more technicals on your side in that case. Being below the moving averages, being below these sort of support levels, and then in that case, if it breaks below, you might want to be looking for these these low in the 280 range. I think that would be a better risk reward strategy in that one. BIDU, another one that had a blowout number and has an amazing run. It's tough to be buying up here, but again, we'll see how it reacts on Monday and into the week. And ideally, we see Friday's low hold up, and then it does a sort of like an Intel, where it just sort of sits up in here, creates a new base, and then gives us a new level to be getting involved. So that's another one to keep an eye out for that gap earnings type of gap up earnings strategy. And really that's it for the week. I mean, there's a couple stocks that aren't so highly followed that I'm keeping an eye on. Biotech, this SLXP pharmaceutical had a pretty good gap up in here. Unlike what I like to see, if you go back and take a look at it after that gap up, it's like, okay, everything's good at this point. Everything's good. But now because ideally when it gets above that gap up high, you want to see some momentum come in and push that thing higher. But what they did is they actually kind of sold it back in, kind of held, looked like it wanted to go on this day, and then it kind of came in, and then boom, on this day, you kind of had this. It's tested below, and it just keeps trending lower, and then now it's just kind of become garbage. But you know, at the same point, you know, it's one of these things now. All right, let's just draw a trend line to this, and say, all right, well, at least now if it's held the gap, so that's a good sign, right? It held this level, which is so far anyway, and now might be, you know, a good low risk to reward setup. Especially if it gets above this 134, 135 area, it might be worth a shot. Like to see some volume come in as well. Volume is key in these type of stocks, and really any stock for that matter. But you really would like to see some volume pop up above this moving average with a breakout above here. That would be show me a good indication that this thing may now want to challenge this 140-ish high from this gap up. So that's the stock I'm going to be watching this week. Adobe, very similar to this stock, it has a gap up, just kind of been trashed since then, but it's held the gap for the most part, and it's kind of just going sideways. I don't know if this is really a momentum stock, not really, although sometimes these stocks could surprise you when they do take out some levels, especially if it catches some people short in here, and now it breaks this level here, the 73 and change. You know, all right, it goes up a buck, it's at the highs, and then, you know, it's not not too far to break to make new all-time highs here, and again, we want to see some volume in that. So that's another one I'm going to keep an eye out as well. And then this one, Activists. So not your most liquid stock, but again, it trades roughly over 1 million shares a day, so it's not too bad. Not as good as that SLXP or Adobe, but it has this little, just keeps tightening. It's above these moving averages, which looks good to me. Again, if we see some volume come in here and break above these 220-ish to 222 area, and some volume come in, it may have a nice little potential move up into this 230s, challenge these highs, challenge the highs from February. That again, this game is about risk reward, and these are the type of tight setups that I like to look at and see. Again, the volume, on the open on this stock, it's a pretty wide stock on the open, just something to keep in mind if you're going to be buying it early, off on the open. So as far as individual names, that's all I got. It'll be a busy week, so I really want to keep it to the A plus type setups this week, just for the fact of all the stuff that's going on, geopolitical risks and whatever. But I think the market's holding up quite well to that. Again, that just shows the potential relative strength, tactically anyway, in this market. And until we break below some key support levels, I'm not going to sit here and tell you, oh, be careful. Hey, yeah, sure, be careful. Keep your stops tight in your tactical plays, but and looking for these lower risk, higher reward type setups is the name of the game. So anyway, without any further ado, thank you very much. Have a great week.